With this video, we're going to look at the dark short. The dark short is one of the widgets that you have on EPSmomentum. On that widget, you can look at the divergence between the dark shorts and the price. You have the price, the dark shorts, and the dark short slope. But let's go into more detail into what dark short is. So what is dark shorts? Dark shorts has two words, dark and short. So dark for really OTC markets. Everything that happens in the dark, not at the exchange, not for everyone to see. Usually on the exchange, I mean, you can get it on the tape, but people actually don't see what's being traded over the counter. So what's over the counter is between a buy side and a sell side. Buy side will be asset managers and hedge funds and others, and sell side will be market makers and banks and brokers usually. So what happens here is the buy side would like to purchase 100 million of IBM. So this is the first transaction. So if they want to buy 100 million of IBM, they have two choices. They either ask for it to be traded on the exchange, ask their brokers or market makers to trade directly to the exchange, or they ask if they can cross with them for big size, like a big lot. So for that, the market makers can facilitate that on the basis that they will have to provide the shares without having them, so being sell short, and immediately buy it from someone else, right? So this is first case, the buy side is buying. The second case is the buy side is selling. So they're selling 100 million, and in this case, the market makers are buying from them and immediately selling it to some other counterparty. So in all of these four cases, the only one case that needs to be reporting to FINRA is this case, which is a sell short, where it triggers reporting immediately as when the market makers actually enter into a selling short transaction. So that's why it's important that if we can monitor this, then obviously in front it means that we have all the big asset managers and hedge funds buying. So that's why this type of data set is useful. So back to our application on EPSmomentum, what we can see here is the widget dark short. On the widget dark short, you have three major curves. So one is the price, the other one is the dark short, and the other one is the dark short slope. And you can see also an indicator divergence or in sync. So let's go over the price and the dark short. So dark short is in percentage terms. So when you see 63%, 98, that means that 63% of the volume for that day was traded by, or actually was a short from market maker, meaning it was a buy from big asset managers. So read it more as a buy. So it's a very strong buying signal from asset managers and hedge funds. Okay, so let's have a look at these transactions. You can see that some of these transactions on the dark short side, so the yellow curve here, precede the price move. Sometimes there's some spike and then a collapse, price collapses as well, and then it precedes the price move by several weeks, jumps higher, and most importantly here, start to identify the turnaround and tops here several weeks before the price stops, right? So it's a leading indicator. It's basically the smart money getting in or out of a stock without you noticing. But with this widget, you can quickly notice. So this is very powerful. Now let's have a look at the dark short slope. So if we remove the price, you can see the slope is the 10-day slope of the dark short. So it's basically a leading indicator of the dark short. So as the red shoots up and the yellow shoots up, one it's at the top, the red is already collapsing and then shoots up again and so on. So it's really a leading indicator or leading metrics for the dark short move. So if we shut off the dark short move here and we put on the price, you can see that the dark short slope is trending up and up and up, and the price starts rallying, and then the dark short slope collapses and the price tops and stops. and then a little bit of a jump here, and then price collapse, but the dark short slope as well. So really very powerful tool to monitor or to anticipate the price move. So how can we take this to another level and use it with our screener? So let's go to the screener. So on the screener, you have a category, volatility, where you can see the dark shorts here, the dark short slope, 10 days, or the percent change, or the 20-day change, the percentile, and the signal. So what is a signal? So the signal is either divergence or in sync. And this is the flag that you see here on the top, in sync. So in sync basically tells you that let's remove the slope here. Actually, let's keep the slope. But let's look at the slope 10 days and the slope of the blue line and the red line. You see they're both in sync, rallying up on a 10-day basis. What does that mean? Well, that means that there's a rally and they're both heading north in that rally, and everything's perfect. Great. But it could be useful to look at it in a way of that slope pushing the rally up or down, but also in a divergence way, meaning the slope is leading the price. And this is what we're going to do. So you go into the filter, divergence, you pick divergence, you filter by market cap if you want, and then let's say you look at Apple. Okay, so this is a divergence. So what does that mean? That means that, let's remove the short here. Divergence means that the red curve is actually heading south very drastically, and the price on the 10-day basis is actually going up, so really diverging. Why is that useful? Because look at this. Here, before the rally, we have a shoot up of the dark short slope, very high up. And here they're completely diverging. Price is going down or flat, and here the dark short is going up. What does that mean? That means that institutional buyers are getting into the name, buying heavily, and that pushes prices. Actually, it doesn't push prices. They're preparing for the rally, and then surely enough, the rally arrives, and here it is. Then the dark short collapses, and you can see the price plateaus because all the institutions are selling, right? And then they immediately get back in for whatever their reason is. And they get back in and push the price even higher up. And you would know several weeks before the price push goes up. So spotting the divergence is very, very powerful because it gives you a leading indicator of whether a stock is going to rally. So what does it say here? Well, it said that the dark short slope is heading down significantly. The price is very high up and maybe in exhaustion, right? So maybe there's a correction coming. So very, very useful flag to use in the screener. The second thing you can look at is the percentile. The percentile tells you how high the value of the dark short is compared to history. So if we sort by the maximum 100 here, we can see that many names are hitting their high. So LUV, for example, the dark short has never been higher than this. It's 100 percentile, right? So it's really, really high. So there's a lot of institutional buying in the name right now. Will it mean a rally? Maybe. But it's very important to see those abnormal points in this data set. So another one is, I don't know, for example, SRE. Here, again, very high dark short. Let's remove the slope, very high price. There's a rally. Maybe the rally continues if the dark short keeps getting higher and higher. Has never been as high as this. I mean, it's 98 percentile. Again, very high up. 60% of the volume is traded is a buy volume from institution. So very, very important. Finally, you can look at spreads. So we can take the 20-day change of the dark short. So 20-day change is this column here. 20-day indicator change. So that's the 20-day change of the dark short, and maybe it goes up 10-15% minimum. So we can just filter on this, and obviously we filter by market cap if we want. Maybe we want divergence, and we pick a stock like UNP, for example. So see how it's been shooting up recently and very significantly, and the price has been really drifting down. So it's in divergence, the shorts are shooting up, and that's a perfect storm, right? Which is a divergence between the price and the dark short, a rally in the last 20 days of the dark short, and really preparing for maybe a push on the stock price. Usually when it reaches something above 50%, 45 plus to 50%, it's very significant, and you can expect, statistically it's been proven that there's a positive price move after that in the following weeks after that. So again, very, very powerful tools. Use those field in the screener, and you can marry it with the revisions, you can marry it with the drift, you can marry it with many other tools there. So I hope it was useful, and again, let us know if you have any questions at support@EPSmomentum.com. Thank you.